If you've been late paying your bills in the past or have a mountain of debt, your credit score may be lower than you'd like it to be. Bad credit can be a frustrating disadvantage, particularly when getting lenders to trust in your ability to pay them back over time. A personal loan can be a good way to pay for emergency expenses or consolidate debt, while having an inferior credit score will mean paying higher interest rates. Obtaining a personal loan with bad credit is still possible by taking some simple steps to improve your score and shopping around with multiple lenders. Welcome to another episode of the multiverse of making money online. Subscribe to our channel to stay up to date with the latest uploads. Just a note here, please keep in mind that we are not certified financial advisors. We simply provide information and educational videos. Please do your due diligence when investing. Okay, let's get into today's video. What does it mean to have bad credit? Almost every American has a credit file compiled by one or more credit bureaus. TransUnion, Equifax, and Experian. Your credit files are used to compile a credit score, a number that tries to define how risky you would be as a borrower. Credit scores range from 300 to 850. Generally anything under 580 is considered bad. If you have bad credit, you typically have a short credit history, a history of late payments, lots of debt relative to your income, or any combination of those factors. Ways to get a personal loan with bad credit. Knowing what to expect when you apply for a personal loan will help you prepare for the process. If you're in the market for a personal loan and you have imperfect credit, here are 8 steps to keep in mind. Number 1, check your credit score and credit reports. Before you apply for a personal loan, take a close look at your credit report and credit score, says Bruce McClary, spokesman for the National Foundation for Credit Counseling. Federal law entitles you to a free copy of your credit report every 12 months from the major credit reporting bureaus, Equifax, Experian, and TransUnion. Visit annualcreditreport.com to request your free credit reports. They won't display your credit scores, but you can visit each credit reporting agency's websites to view them for free with Equifax or Experian, or for a nominal fee with TransUnion. With your report in hand, you'll know exactly what your credit score is, and you'll be able to identify any negative marks on your record. If you find errors or old debt on your report, you can try to correct them before applying for a personal loan. Number 2, ensure that you can repay the loan. If you have bad credit, the last thing you want to do is take out a loan you can't repay. This will only make your credit score worse. As you shop for loans, ensure you know the monthly payments and when they will be due. Use Bankrate's personal loan calculator to estimate monthly payments and review your budget to make a repayment plan. If you will have trouble paying, consider other options for getting cash. You don't want to take out a personal loan you can't afford. Number 3, compare bad credit loans. While a bad credit score will not qualify you for the best rates and terms, don't assume that only the worst rates and terms will be available. You may get a better deal at your bank or credit union. It can be advantageous if you have a relationship with a community bank or credit union. If the bank knows you and your spending habits, your low credit score can be mitigated by your history of paying on time and keeping a balance in your accounts. Some reputable online lenders offer loans to consumers with poor to average credit scores. Some of Bankrate's recommended bad credit personal loan lenders offer rates starting as low as 5.67%. Number 4, get pre-qualified. Pre-qualification, sometimes used interchangeably with pre-approval, allows you to find out if you will likely qualify for a loan. You can give the lender your information to find out if you are pre-approved using a soft credit inquiry. Why does this matter? Typically, a lending institution will do a hard credit check when you apply for a loan. A hard credit check can lower your credit score temporarily. This may be frustrating if you apply for a loan, get a hard credit check, and are denied the loan. Then you must apply for other loans with a possibly lower credit score than when you started. Talk to potential lenders to see if you can get pre-qualified for a personal loan. Then you can evaluate several loan options without multiple hard credit inquiries. Some lenders may even allow you to complete this process online in just a few minutes. Consider the interest rates and loan terms offered when comparing your loan options. It's equally important to assess any fees, like origin fees and repayment penalties the lender may charge. In some instances, a loan with a lower interest rate may not be the best deal if the fees the lender charges are on the higher end. Number 5, look into secured loans. A secured loan is a loan backed by assets such as a home or a car. Because secured loans use collateral to back your loan, They typically have better rates than unsecured loans. If you have collateral to back your loan, this may be your best option with bad credit. Consider shopping around with lenders offering secured loans if you decide it's a suitable option. Keep in mind that secured loans risk losing your assets, so they should only be considered if you can afford to make timely loan payments. Number 6, add a cosigner if necessary. A cosigner is someone who agrees to sign on to the loan with you. They are agreeing to pay back the loan if you can't. If you are having trouble qualifying for a loan, a cosigner can help you qualify if they have a better credit score and credit history. But you want to confirm with the lender that cosigners are permitted, as they're not always allowed. Taking out a loan with a cosigner can make personal relationships go bad if you have trouble paying off the loan. So make sure you both know what you are signing up for if you decide to take out a loan with a cosigner. Number 7, gather financial documents. When you apply for any loan, the lender will request several financial documents to complete your application. Gather these documents and pieces of information before you start applying for loans, as you may need some or all of them to complete your application. Personal contact info, including social security number, full name, and address. Your driver's license or another form of personal identification. Personal loan info such as why you need the loan and how long of a term you want. W-2 forms for the last 2 years. Your federal tax return for the last 2 years. The 2 most recent bank statements for all bank accounts. Recent pay stubs, utility bills, or mortgage statements to verify your address. Your lender can always request additional documents, so you should be prepared to provide any extra requests quickly. Number 8, be prepared for a hard credit check. When you are ready to officially apply for a personal loan, know that the lender will likely perform a hard credit check, also called a hard pull. In the short term, a hard pull will lower your credit score. Too many hard credit checks in a short time can make it look like you're applying for loans that you can't afford. So be careful with how many loans you apply for, and be prepared to see your credit score drop temporarily with a loan application. As you make timely payments on your loan, you should be able to get your credit score back up in a few months. Types of bad credit loans. Several types of loans may be good for people with bad credit. A personal loan is not your only option. Consider these loan options as you shop around. Bank agreement. If you already have a relationship with your bank, they may be willing to offer you a short-term loan agreement until you get your credit score back up. It never hurts to ask. Cash advance. A cash advance on your credit card is a way to withdraw cash using your credit card. Most credit cards have limits on how much cash you can take out. It's important to remember that you will be charged interest on any cash advance you take, and rates for cash advances are often higher than other credit card purchases. Home equity loan. A home equity loan is a loan that allows you to access your home equity and use it as a collateral for a loan. Your loan is dispersed in one lump sum and must be paid back in monthly payments. Home equity line of credit, or HELOC. An HELOC will only be an option if the mortgage balance on your primary residence is significantly less than your home is worth. As the name implies, an HELOC is a revolving line of credit analogous to a credit card. You will have a limit based on the amount of equity you have in your home, and you'll be charged interest only on the purchases you make on the line. Installment loan. An installment loan, an umbrella term that includes personal loans, is a type of loan that lets you borrow a specific amount of money and pay it off over time. Unlike a credit card, where you have access to a revolving credit line and are charged interest based on the amount you use, an installment loan gives you a lump sum up front. You'll then pay a fixed amount for a specified number of months. Payday loan. A payday loan is a loan for a small amount that has a short-term repayment period, usually by your next paycheck. These loans typically have high interest and must be repaid in one lump sum payment. A payday loan is costly and often isn't the best option available. Peer-to-peer, or P2P loan. Peer-to-peer lending is another alternative to a traditional loan that may be an option for someone with bad credit. Most peer-to-peer lending occurs with online personal loan lenders like Prosper or Lending Club. With peer-to-peer lending, you'll apply for a loan as usual, but the loan is funded by individual investors rather than the lender itself. Secured personal loan. A secured personal loan uses something you own as collateral, such as a house or a car. If you cannot pay the loan, the lender has the right to take ownership of the possession you use as collateral for your loan. A secured personal loan typically comes with better rates and terms than an unsecured loan. Student loan. You can apply for both federal and private student loans. Both are options if you need money to pay for college. Federal student loans generally have better terms and rates than private student loans. Unsecured personal loan. An unsecured personal loan does not require collateral from the borrower. Rates and terms aren't as favorable as secured loans, but unsecured loans offer an option if you don't have a possession you can use as collateral. And it's possible to get a personal loan even if you have bad credit. However, you must shop around to find the best options. Some lenders target subprime borrowers, but their loan products often cost much more. Secured loans are also an option, but you risk losing your asset if you encounter financial hardship. But you could find that online banks are worth considering. Many reputable options feature flexible qualification criteria and sometimes cater to borrowers with past credit mishaps. Consider getting pre-qualified to determine which lenders could be a good fit. And with that, we've reached the end of this video. If you enjoyed it, you found it interesting, don't forget to leave a like and subscribe for more content just like this. Thanks for watching, and we'll see you in the next one.